Hello everyone. Bitcoin is trading at $107,763. And now, in the simplest way possible, we'll try to analyze the chart. First, without any markings at all, we'll only use moving averages. After that, I'll add the markings and show some additional arguments that indicate Bitcoin has every chance to reach the area of $112,000. In the next video, I'll try to cover either Ethereum or some other altcoin. But for now, let's focus on Bitcoin. So let's start with the monthly candles. We can only see the big picture from a distance, which is why we're looking at the monthly candles. Notice that it's July now, the beginning of the month. The previous candle, the one for June, gave us the highest closing in Bitcoin's history, but it didn't set a new all-time high. The May candle, as of the end of May, gave Bitcoin its highest historical close and set a new all-time high. And candles like these usually get a follow-up, at least in the form of a new high. This suggests that the May high, which is also the all-time high $11,980, will most likely be surpassed, and it looks like this will happen in July. But you need to consider one very important point. On the monthly candles, we have a double divergence. Look here, we focus on this RSI high. This high corresponds to this price high. Now we move to the next RSI high. Let's take this one here. This high corresponds to this price high. The price has risen significantly, but the RSI high hasn't increased compared to the previous one. This means that in this section, during this price growth, we have a divergence. And now look at the May candle. Here is its high, it's even higher, it's a historical high, but the RSI high is already lower than the previous two. And this means we now have a double divergence. And despite the fact that the May candle is signaling and suggesting that the high will most likely be updated, after this update there is a very high probability of a sharp drop in Bitcoin due to the double divergence. This is not a guarantee, but it is a very significant risk of a decline. Therefore, $112,000 may turn out to be the growth limit. But other scenarios are possible. If Bitcoin starts to decline from 112,000, the main target levels for the drop will be the $82,500 level. This is the reversal point where the monthly candles turned around. The next level is the starting point from which the growth began, which is $71,000. Well, judging by the candle closes, that is, after breaking through the 71,000 level, look at the surge we saw in Bitcoin. And finally, this level down here, where the growth started from the bottom, from the consolidation zones, is around $58,000 to $59,000. And the 50-month moving average is also pointing roughly to this area. So, from the perspective of monthly candles, we can see growth toward the area of 112,000, and then a decline at least, yes, to around $83,000. Let's move on to the weekly candles. Notice we have a simple chart, there's nothing else, just candles and moving averages. That's it. On the weekly candles, last week formed a bullish engulfing of the week before. This means that with a fairly high probability, we should reach the point where the decline started, specifically the beginning of this red candle. Its opening is $109,000. To be precise, that's $109,004.20. Accordingly, this week we've already seen $108,790, just barely missing the 109 level. And the next level is directly the all-time high of Bitcoin. That's why the weekly candles also suggest that growth should continue, at least to the area of $109,000, and then further to around $112,000. So there's nothing here indicating a decline. At the same time, there's no divergence here. Why? Because the RSI between these highs and these highs dropped to below 50. And in such cases, we don't consider divergence on the RSI indicator. Let's move on to the daily candles. The daily candles also show quite an interesting picture. It consists of two important points. Actually, there are more, but on a chart like this without my markings, there are two. The first point is that we see a moving average crossover. The 100-day moving average, the red one, crossed above the 200-day, the orange one from below. This indicates that after this crossover, there is a high probability that we can update the nearest high that was set before this crossover. This high is located in this area. That's $110,000. So this is the target zone from the perspective of the moving average crossover. Moving on. Notice that yesterday Bitcoin broke below the green 5-day moving average, which technically signaled to us that it was ready to fall. But today's candle could fundamentally change the direction of the market. So not only are we closing again well, with a high probability, of course it's too early to say for sure before the candle closes, but with a high probability, we're closing above the 5-day moving average. And secondly, there's a fairly high chance that we'll see an engulfing of this red candle. If this engulfing happens, then the next technical growth target will be $108,400, the point from which the decline started, based on the candle body. And the next point is already this very high, 100. Where does this moving average crossover take us? That's the area of $110,000. And if we recall the weekly and monthly candles, they indicate that we should see 112. An extremely simple explanation, an extremely simple analysis. Now let's turn on my markup that I have on this chart. Look, we have an important level at $106,133. Yesterday we broke below it, and today it looks like we're breaking above it. Let me mute my computer now because there are a lot of notifications popping up. So they're gonna get in our way. So look, what is this 106,133 level? We had a rally that stopped at 106,133 in December 2024, after which we started to fall. Well, Bitcoin started to fall and dropped to around $90,000, $89,000. After that, it started to rise, to grow. And notice, for many days, a lot of days, let me zoom in, kept hitting the $106,133 level, but still couldn't break through it. After that, from the $106,133 level, it went down to the $75,000 level. And accordingly, this level is very, very important. So the fact that we broke through it yesterday signaled a decline in Bitcoin. But if today it turns out that we absorb the red candle and once again consolidate above 106,133, it will mean that buyers were shaken out of their long positions. That is, stop orders placed below 106,133 were triggered here, and some people may have even been liquidated. And with high probability, we will see a move toward the next important level, $110,000, because a reversal also occurred at this level on the daily candles. That's all there is to it. So we are expecting Bitcoin to rise to around $112,000, and I think this is the most likely scenario. Subscribe! In the next video, we will most likely talk about Ethereum or some altcoin. And we also won't forget about the stock market, but that will come a little later. Goodbye.